Hello traders, today is May the 20th. My name is Abel Hornsey, market and YouTrading, and today I'm looking at S&P 500. Okay, starting with the YouTrading.com for its heat map. Bottom left-hand corner is green, top right-hand corner is red. This is perfect for buying equities and commodities normally. So we are looking for a risk on day. So essentially, when we look at the S&P 500, we are looking to go long intraday. Obviously, this can change when we get into the US session, but we don't have much economic data to sort of enable that. So there might not be a catalyst for a reversal of this sentiment. But if we go to the active trader platform, go to the weekly chart, we are in an overall uptrend. We are above the 200 period moving average on the weekly. So long-term investors are still bullish. If we were to get back below and close below the 200 period moving average, maybe we'll get more. But if we look back in time, that very rarely happens. So a move down to the weekly 200 period moving average should be, on the cards. It has happened before. It could happen again. Obviously, we are correcting from March 20 up to January 2022. So there's a big move that we could correct. And at the moment, we haven't even got back below towards the value line of 50% retracement. Looking to the left, got USA 500, which is the CFD, which follows the underlying S&P 500. 52% of traders are trying to go long, 48% are trying to go short. So, essentially sentiment is balanced. So sentiment's balanced, momentum's to the upside. Currently, price action is showing a correction and possibly the start of a downtrend. So, very mixed at the moment. It's not easy to sort of say. So if we take the daily sentiment through the flows that we see in Forex and transfer them over to the equities. This morning, I'm looking for a long, but that could change any time because we are in this corrective move. What do I mean by corrective? Well, if we go to the left-hand side here, we've got Elliot wave, impulsive wave, and we've also got correction waves. So if we were talking about impulsive wave from March 2020, where we had the low, Fed stepped in, backs the market. We have speculators jump in, wave one. Then we have some profit taken. Wave two comes back as a correction. Then another impulsive wave up, wave three. Wave three is generally not allowed to be the shortest wave, so it's generally the longest. Wave four, another deep correction, doesn't really close below wave one on a usual impulsive wave. And then we have a fifth wave, which, like I said, is as long as wave three isn't the shortest, then wave five could actually extend or it could fail. So wave five is more of an unpredictable wave. It's very hard to know when this impulsive nature is going to finish. Once we've got our impulsive wave, then we go into a corrective wave. So coming down here, got the classic ABC. So A is the first correction. This is when all the buyers in this impulsive wave have taken profits. Then we have wave B. This is when we have latecomers to the impulsive move, thinking that they can get back in on the uptrend. There's not a lot of volume behind them. The sellers are waiting near the highs, and then they sell it off. And basically, anyone that was late to this impulsive move pukes when we get a break of market structure. So that's what we're looking at the moment. We're looking at this ABC sort of pattern. I think it's completed because if we look from the highs to the low here, so this wave A, that took us down to 4,098. Then we had quite a deep retracement up for wave B. And then this B to C wave has not only completed the same sort of distance as this first initial A wave. And so that's an equal wave. We are looking now so that we've pushed through, but not closed below. And we're not looking like we're coming down to the 1.618. If we were to come down to the 1.618, then that sort of changes the nature of the ABC. We sort of become more of, this impulsive move. Again, then we can start looking for a move back up towards the low here, around 4,100 to act as resistance. But for now, because we've made a measured move, I think in this ABC is completed. Obviously, other buyers in the markets at the moment looking for risk on trade. And so this is an ideal time to also consider that today. So going to a daily chart, these are the levels that I've marked up as most important. Unfortunately, we've got a double bottom, so there is liquidity under here. So if we were to make a higher high and look like we're, resuming the overall uptrend, there's always going to be a possibility that there's a deep, sharp retracement to take the liquidity underneath the 3,858. So I'd have preferred if we hadn't have come down and made a double bottom. Generally, I look to double tops. Here we've got many equal highs, so there's going to be lots of liquidity above here. That's the kind of level I like to target when I'm looking for, seeing trapped sellers get locked in a trade on the wrong side, and we see them puke as we make break market structure to the upside, and then we target where these liquidity pools are. So 4,308 is kind of where I'm looking. That takes us up to the daily 200 EMA. You can see here the 9 and the 200 are showing that momentum on the short term is the downside, along with price action. It's quite obvious. You can see we've been making lower swing lows, lower swing highs. So if we were to break above 4,098, then that is a good chance that we are breaking market structure, and then we can start to look for some another way of making an impulsive wave higher. So we could go up like this. Assuming that we're going to do that, then yeah, get back above 4,308, take all that liquidity, then we can quite easily push up to all-time highs essentially. Before we get there though, we've got the low from the 17th of May, 4,004 on the sort of level. That to me is the first level of significant resistance. So if we can't get back above there, then I think that's how we come back, sweep the lows here. If not, continue to the 50% retracement of 3,485 or this 1.618 extension, depending on which way you're looking at the market. So if we get, like I said, back above 4,400, back above 4,098, we look to the left. This is the 4th of May. So this is the FOMC day. This is when we had a big push up close, and then unfortunately a sell off the next day. So liquidity above there, like I said. If we go to what's happening in the yields, here I've got US 2-year yield, which is directly affected by the FOMC. And we can see that there's a high correlation with the dollar versus the yen. And we can see as the US 2-year yield has been pushing up higher, especially since the Fed really got hawkish in December 2021. The dollar versus the yen has gone a lot higher. Dollar yen broke away from the 2-year yields, but it's starting to look like it hasn't closed below this swing low. So essentially we could be seeing further up moves in the yields. If we were to see all of that breakdown, then that could signal that the market's priced in now, or the inflation, we could be pricing in peak inflation, which means any sort of tech stocks, any sort of high beta stocks, could get a bit of relief. And that's another reason why we get a push higher. If the 2-year yield were to keep pushing because of inflation worries, then that's going to affect corporate profits in the future, and that's why we get a lower low in the coming months. If I just clear all this off, another thing that traders will be looking at is sort of chart patterns. Look here, we've got a head and shoulders pattern. So some traders might have seen this impulsive move up here, then a correction, and then another impulsive move ending the impulsive move. Then we came back below the 200-period moving average, and we made, essentially this neckline now. Now we've got this right shoulder, and we've broken through the neckline, sort of messed about. We came back up, found some resistance, and then came lower. So lots of traders are looking to see if this head and shoulders pattern plays out. If it does, then we're looking for a measured move again. So if I go to my measure move tool here, so we've got price range from the head to the neckline. And then if we just move that down to where it broke out, that takes us all the way down towards 3,300. Looking to the left, that takes us into this area of balance here. So if we just go like that, so somewhere in there, in this range, from the sort of summer of 2020 to the autumn of 2020, yeah, we could be making a move all the way down to there. Again, if I get the fib tool, just pull that up to here, find the low. A measured move on the head and shoulders breakdown would take us somewhere between the sort of 50% retracement and the 618% retracement. So essentially, that'd be a perfect head and shoulders move to the downside. That we'd find buyers where buyers and sellers battled it out before, and a perfect down move. So that's the reason for going short if you are looking for this head and shoulders to play out. Obviously, head and shoulders don't always play out. It's better when they are at the top of the move, and this head and shoulders is definitely at the top of the move. This is the all-time highs up here, so this is a proper head and shoulders. It's not just a continuation trade, and by that, when we've seen them in the past, lots of traders will put their stops above the right hand shoulder. Once we get back above there, that liquidity is taken, and then we get an acceleration to the upside. So at the moment, on the daily chart, I am bearish. Today, we are seeing a bullish move. I don't know if we're going to make it past the low of 17th of May, but if we do, then that opens up for this sort of descending channel to break to the upside, and then that's when I think we come up and test the 200 period moving average, take the liquidity above the 4,300, and then depending on when that happens, what gets us up there, what catalyst gets us up there, we have to reassess around 4,300, or wait until we get back down here, 3,350 maybe, to start looking for a longer term buying opportunity. So that's what I'm looking at the moment in the USA 500. We just go to what I am also seeing in the rest of the markets. Just come down. So we've got USA Tech, which is the NASDAQ. That came down to the halfway mark. So we had a big impulsive move, from March 2020, like the S&P 500, up to the highs of 2021. 2022 has just been this big corrective move to the downside. They came down to the halfway mark. So if we can get back above 12,232, then that is a good sign. Otherwise, we could be coming down towards 10,500. Looking at the USA Russell, small caps have led the markets, the larger cap markets lower. We're seeing that they've also come down to the 50% retracement of this bigger move. So again, looking to see if that correction is now completed. USA Industrials, this is the Dow Jones essentially. And again, corrective move hasn't really been overpriced, maybe over time. It's kind of just grinded out this descending channel, looking, unfortunately, that it took out the low from the 12th of May. We didn't close below that, so we had just a little look below. That's a kind of a better scenario, if you like, if we do that now, break above this swing high here, because we've cleared any sort of liquidity that was there. If we get back above, then we can start making a move to the upside, not having to worry like we are with the USA 500 that the liquidity is still there for another move down. UK 100, I've actually taken a long on this, came down to the 200 period moving average. Then we had, using the sort of trend following strategy that I outlined earlier, we had a close back above the 9 EMA after a close below the Bollinger Band lower here. So looking for going long, had another pullback into the 200 period moving average, didn't close below it. So I took essentially a long from there. So looking now to see if we can break above the swing high from 18th of May and then start taking out, maybe 7,700. German DAX, descending channels that descend generally breaks the upside. So now looking to see if we can make higher highs and then higher lows like this, get back above the 200 period moving average, and then maybe a slightly deeper correction of this move from January 2022 down to March 2022. There is the double top up here. So if we were to carry on going, then liquidity above there would be a good target, 16,300 all-time highs and things like that. So maybe the DAX is going to lead us higher, and we'll see how that goes. Dollar yen, as we mentioned it before, because of the correlation with the 2-year yields. Looking here, yen has been the weakest currency today, so looking for a long. We had this low here from 12th of May. Traders came down to it yesterday, pushed through, and if we go to like a smaller time frame, look on the hourly, look to the left, we had this swing low here. So these are the last of the sellers before we pushed up. We've got this double top up here, so that's where I'm looking to take profits. We had, like I said, swing low on the 12th of May, came back below, looked like we're going to go lower. We didn't get a bounce off, the retest of this low, so come back inside the range, maybe trapped the sellers. So that's kind of what I'm looking at. I'm looking to see if we've trapped sellers, see if we can get back above some of these other levels around 130, see if we can get back up to the double top around 131.5. So that's what I'm looking at the moment. Obviously, if we were to break lower, then the sort of target is the low here where my stop is. And then, I can see that dollar versus the yen is going to come lower, which, may not be a bad thing for the rest of the markets. S&P 500, smaller time frame stuff, double bottom. Lots of people think that's support. We definitely need to get back above 4,100. I don't know if we're going to have enough data today. Might get some headline risk. If we look at these highs here, this channel, looking for it to break that back above this one, and then see if we can essentially make higher highs, higher lows like this. All right, that's what I'm looking at the moment. Good luck today. It's Friday. It's going to be options expiry. I don't generally encourage people to trade the third Friday of the month. Going to the weekend happy, and I'll see you again next week.